All right, does a market rally to kick off the new week suggest that that correction we saw recently was just a momentary pause in a bull market? Or is it a reflection of how volatile these markets can be in the face of tariff uncertainty? Let's bring in Art Hogan, who's chief market strategist at B. Riley Wealth, to get his perspective on what's going on. Art, good to see you. What do you make of the action today?
Yeah, I think it's really reflective of what it would take to remove some uncertainty around trade policy here in the United States. And I think that, if we harken back to the 2018 tariff playbook, we would have a very similar pattern where a lot of things were said, but not as much of that came to fruition or were done, right? So I think the market had been hoping that this would be a replay of that, but this is the first time it seems as though there may be a bit of a pullback or a clawback of the intended universal application of tariffs. And that would make sense, more targeted, very much like we saw in 2018, less impactful, less inflationary, less economically dramatic. So we don't know. There's still uncertainty. And this, the story that Bloomberg put out really talks about it being not used against certain industries and maybe even certain countries. So this is the first time we've had a bit of a pause in the rhetoric. And it comes at a point where the market had certainly got to a place where it had been very oversold. Over the course of the last 4 weeks, we certainly had that 10% correction in the S&P, much more in the NASDAQ. And clearly, if you look underneath the surface of the broad indices, you see that the number of stocks that were trading below the 200-day moving average really pointed to a place that we had gotten into pricing a lot of bad future events. And perhaps some of that is getting better. We'll have to wait and see as the week wears on. But the market was poised for some good news because it clearly had been focusing on some pretty negative news for about a month.
Let me ask the question slightly differently. It's probably not a similar answer, but to your point, there was this belief that if the stock market started selling off and there was a worry about the economic ramifications of a trade war, that we might see a bit of a pullback in the tough talk from the White House. And obviously, once officially we kicked into trade war territory, investors felt rattled. But what you commonly heard in those early days were that the markets, they weren't prepared for that moment. So how would you describe where the markets have landed now? Like on a day when you see what feels like a relief rally, what is the general thinking in the markets now? Is it that we are going to be in a trade war and that we've started to reflect that in the stock market, or not quite, or what?
Yeah, John, that's a great question. And it's hard to know where we are in that continuum. I think when you think about this, the market actually came into the year celebrating a new administration that was likely going to be pro-growth and pro-business and likely have a lighter regulatory touch and perhaps keep corporate taxes down. But we were introduced to the negative part of the new administration, which is really about immigration, cutting federal spending, and the universal application of tariffs. Some of that has moderated a bit. And I think there's some rational thinking going on around the application of tariffs. If that's the case, then some of the worst case scenarios that the market was trying to price in don't come to bear. I also think it's important, and Jay Powell brought this up last week at his press conference, is no one was looking at the totality of the new administration's policy. There are some potential offsets if, in fact, we have a later regulatory touch or certainly keep corporate taxes where they are. Everything was hyper-focused on tariffs and how bad that could get. So right now is the first time we've had a sense that perhaps it may moderate a bit, but there's certainly going to be some new tariffs, and we'll certainly have to wait and see what gets announced and how long they last. But the market had gotten to a place where perhaps we had appropriately priced in some of that damage without thinking about some of the offsets of some of the positive attributes of new policy implementation.
Okay, and I also want to try to align some of the less tangible consumer feelings with corporate outlooks. So like in Canada, there was a brand new survey that said that confidence among consumers is very weak, arguably as weak as it was during 2020. And we are starting to hear cautious outlooks. I think we saw some from Nike and FedEx in the U.S. Just this morning, we're talking about a Canadian technology company, Lightspeed. Look, at a certain point, that sentiment decline starts to impact financial performance, and stocks are typically valued based on profit potential. So I guess I wonder how you're thinking about that part, because I guess technically, if we solved all of this, the second half of the year, companies might revise upward or something like that. But that part seems challenging to me, is to determine what kind of profit potential companies have when you're trying to evaluate businesses.
Yeah, that's exactly it. So when you're living in a world of uncertainty around trade policy, that doesn't just affect consumers, it doesn't just affect investors, which it certainly has, but it certainly affects the folks that are running companies and trying to say, this is what we're going to be doing for the rest of the year, when they don't know necessarily what their input costs are going to be. And I think that's where that guidance has come in. I think we're going to see a whole lot more of that as we work our way through the first quarter earnings reporting season, where guidance for the balance of this year in this uncertain period is likely to come down. And then that turns into investor changes and say, okay, we had factored in $285 for S&P 500 earnings this year. That looks like it's going to be 10% less. And therefore, the multiple we put on that will likely have to come down. That's where the sort of technical uncertainty actually turns into fundamental uncertainty in action.
All right. You got somebody who needs some attention over there, Art. I have a golden doodle who is always on my back. We appreciate making time for us. Thanks so much. Good to see you.